Hello. Sports have always been a major part of my life, and seeing all of the incredible athletic performances this summer has inspired me to combine sport with my passion for investing in money in this video. Like most of the world, I've lived the past year and a half in a relatively small bubble, and this has forced us all to focus more on ourselves and our own well-being. But I feel the desire to connect with and help others, which I will try to do here. Athletics forces us to push our limits to achieve goals that were previously not possible. It is a constant struggle and challenge against both self and others, which is probably why so many of us competitive people take to investing. Even the greatest athletes on earth get to a point where their bodies can no longer provide for them at the same elite level, and that's when the next challenge and source of income have to be found, which is where investing comes in. Just like different sporting competitions for different skill levels and interests, there are also different types of investing to be aware of before finding the right match. I've created an investing overview using Olympic events to explain the different investment strategies that you can use to reach your investing goal. The 100-meter dash or day trading, you have to be built for speed here, quick in and out when opportunities arise. There are countless hours of work spent behind the scenes in preparation for brief seconds of actual performance. This is not for everyone, no matter how much you want it. Some people just aren't built for speed on the track or in the investing world. If you're wondering if you can do it, you will need the proper equipment first. Fast internet, a decent computer setup, usually with multiple screens and a good trading platform, low or no fee commissions, have fast reaction time to process large amounts of information quickly, and be able to perform under pressure. If you are slow to react, choke under pressure, and think you can just show up right before the bell and dominate the competition, you are likely in for a rude awakening. Then, as I mentioned, you have to put in the time, whether it be combing through earnings, multitasking with many different live news squawks flowing through your ears at all times, or analyzing countless charts to find a technical setup worthy of a trade. However you find your trades, the work has to be put in before you can successfully and consistently perform on the big stage. I've seen stocks go up thousands of a percent in a day, and it's great to envision being the person who bought it first thing that morning at the low. But there is also someone who chased it at the high tick and watched it crumble back down to earth. You need to have plans that you stick to and be prepared to act quickly for anything that happens. The marathon or walk, long-term investing. Since speed events are not for everyone, maybe you are more of a walking or marathon type person. Let's be honest, it's not as exciting, but that doesn't mean it can't still get you to the golden goal at the end. As the saying goes, slow and steady wins a race. You may not get to the finish line as fast, but walking at a steady and consistent pace can allow you to ensure you reach your goals eventually without the same pressure, stress, and volatility. Most people fail at day trading despite what you may hear or despite some early success, but anyone who sets realistic long-term goals should reach them eventually. Find strong companies you like, diversify across many different companies, sectors, geographic regions, and asset classes, and use time to your advantage, slowly collecting interest, dividends, and capital gains over time. And you should be able to weather absolutely anything the race through life throws at you. There will be bumps and challenges, however, you can still be confident of reaching your goal eventually. You're all going to be relatively close at the start, and in many longer athletic races, just like the race towards retirement or financial independence, the people who rush out to the early lead often actually finish poorly, and the people who are content sitting back and pacing themselves are the ones who are the real winners in the end. Warren Buffett will forever be synonymous with this type of investing, as he started selling gum and Coca-Cola for pennies in profits, but now he has a net worth of over $100 billion. Next, gymnastics or swing trading. Of course, there's much more than just the short speed events and the long, slower events. There can still be a lot of excitement in between. Gymnastics involves an incredible amount of skill and preparation, just like swing trading. There's also always an element out of your control. No matter how much you train and how perfect a routine you perform, there is so little room for error, and in the end, it is up to the judges to evaluate and be the ultimate deciders of your success or failure. That is the same with swing trading. You can believe a company will be successful due to a new product launch or expected strong upcoming earnings, but in the end, no matter how convinced you may be that you have done everything right, there will always be variables out of your control that you are probably not even aware of, and the markets as a whole are the judges of whether your swing trades are successes or failures. Things out of your control, like an entire market collapse, for example with the coronavirus, can cause a fall you would never have possibly expected. As with anything though, you have to get back up with the same confidence and self-belief for the next attempt. And if you truly are good enough to do it for a living, then the successes will overwhelm any failures. Beach volleyball, small caps and growth. The common first impression of beach volleyball is sexy girls in bikinis, but there's much more than meets the eye. Despite obviously being very fit athletes, there is also the need for strategy, communication, and predictions of the opponent's actions in order to be successful. More often than not, these strategies and predictions are wrong, and the point is just a side out where the serving team loses serve to the opponent. However, those few times where the serving team gets a block or a dig and wins a point or two on the serve makes all the difference between success and failure. This is the same as small cap or growth investing. You can just look at what a company does, or some person or service saying this is going to be the next Amazon or Google in attempts to pump and dump, which is sadly seen far too frequently. But to actually be successful in small cap or early stage growth companies, you need to understand much more. Every company wants to make money, but the degree of success or failure for each depends on their ability to have a vision, share their product or service and strategy, and get people and investors on board. They have to predict what customers will want and what competitors will do, and these predictions will rarely come true exactly as expected. But then they must adapt, and sometimes all it takes is one product or service to outweigh countless failures. I think of Moderna here as an example that had never had a product gain FDA approval or go to production. Then all of a sudden last year, their mRNA coronavirus vaccine success took the stock from about $20 when I first started watching and looking at an entry to nearly $500 right now. Next, the rowing cocks, or passive investing. Most people who watch rowing for the first time wonder what is going on with a smaller person at the end of the boat shouting. This person is never built strong and large like the rowers. Their size and strength limits make the probability of them being successful as rowers basically non-existent. However, they can still play an important role in guiding the others who are doing the physical work. This works the same in investing. Some people just can't handle the decision-making stress or aggravation of it all, so they are much more comfortable taking a more passive approach. I don't ever recommend giving all your money to someone else and just saying, take care of it. And I do not like mutual funds due to the high fees. But you can work with a flat fee-based advisor or someone who takes a very small percentage, or just choose a basket of relatively stable but still diversified enough index ETFs. Again, it's not as exciting and you're never going to be headline-making heroes, but you can still reach the same goals and get the same rewards as those taking on a much more hands-on role. Boxing or options. The sweet science is a combination of strength, power, and intellect that can be as simple or as complex as you like, which is exactly the same as options. So many people want the quick jump straight to the top. Also similar to the baseball home run or strikeout analogy, you hear of 100, 200, 500, 1,000% potential in months, weeks, or even days. You focus on the champ in all their glory, but you don't see all of the contenders left in ruins along the way. If you go in swinging wildly, eventually you will find someone bigger, faster, and stronger who knocks you out. Many people, especially lately, have been talking up the YOLO trades, swinging wildly at the champs who have been doing this for decades, hoping one lands and they make it big. A few have been successful, but in reality, almost all of them are getting knocked down, blowing up accounts, or losing significant portion of their savings because they aren't prepared for the challenges they are taking on. Just like boxing has strategies from big brawler to speedy technical fighters, you can go from the simplest, least expensive strategy of buying out of the money calls or puts, all the way to complex strategies like iron condors. Like any strategy, my advice is putting in the training time and always knowing your risks and protecting yourself against the knockouts before going to attack the champ. Decathlon, or combining different strategies and skills. You may not be world class in any one area, but you may be strong across many different disciplines. Then the decathlon style of combining many different investing styles is probably right for you. To do this, you need to be good at all of the individual elements. Don't go competing in an area where you know you are consistently going to lose at. But if you can consistently perform well across many different disciplines, then go for it. And you may be much more successful than if you just focused all of your time and energy in only one small area. Along with those different investing styles, I have a few more categories of tips. Hurdles or obstacles in front of you that you need to overcome. A lot of people find obstacles to use as excuses not to succeed or not to do something. In the hurdles, there are obstacles one after another the entire race, but competitors have to overcome them one at a time. In investing, there are always going to be new obstacles that you must overcome. Before even starting, you need to make money so that you have something to start investing. It doesn't matter how much you make, if you can spend less than you earn, then you will have some disposable income left for investing. The more you can invest, the more you can expect in return. Then you need a means to make your investments through an institution. I have an entire video and information tables on my site just comparing all the advantages and disadvantages of different self-service trading brokerages, so you can check those out if you'd like. But I will not get into those here. The key thing is you have to find somewhere that allows you to transfer in money and then buy and sell as you please relatively easily and preferably at low or no cost. Don't sign up for an elaborate active trader platform with high monthly fees if you don't understand most of the features and are only going to make the occasional passive investment. If on the other hand you plan on day trading, then don't go attempting this on a basic feature phone app. Make sure to pick what is best for you and your style. You also need time, both to seek out and make your investments and to let your investments grow. It is always best to start young and give yourself plenty of time to achieve your goals. I won't go through a specific numerical example, but as many of you probably already know, saving a smaller amount from a young age will be much more beneficial at retirement than starting to save larger amounts closer to retirement, with all other things held consistent. Once you have some money to invest, a platform, and some time to do it, then whatever style and investments you choose, you're only a few clicks away from investing success when an opportunity you like arises. Team events or teamwork. Even in individual events, no athlete can do it alone. Everyone has had coaches, but also likely teachers, nutritionists, psychologists, doctors, family and friends along the way that all helped make their achievements truly possible. None of us know everything in any field. Far from it. We are all also physically and mentally limited in what we can possibly do as one individual. However, with others we can achieve much more. Others can motivate us when needed, point out our mistakes and give us advice on how to fix them for the next time, guide us in areas where they are more experienced, and so much more. Many individuals also cannot be successful alone in sport or in investing. They need to work on a team with others or have someone to guide them, under which cases they can be extremely successful. I don't encourage trade mirroring or just copying anyone no matter how successful they are for many reasons. But that doesn't mean you can't have someone else take the lead and follow somewhat in their footsteps. As much as I am an advocate for people taking more control or at least understanding of their finances and investments, I don't recommend trying to do it alone. I am very independent, but I still take part in many different chats, listen to many different analysts, research on many different sites, some of which I just learned what not to do or what didn't work. But there were bits of information and knowledge I gained along the way that will forever benefit me. Now, even though I know I will always have more to learn and can always do better across all aspects of my personal investing, I am successful and able to help others. Finally, high jump, know your goals and limits. Perhaps the best moment of the Olympics was when, after 2 flawless performances in the high jump, 2 competitors and friends both reached a height they couldn't top and chose without hesitation to share a gold medal instead of continuing to battle for one winner. We all want to push ourselves to new heights, but everything has limits. Be happy with your successes and know when you reach your limit. Some people get overconfident or downright cocky after some early success and take larger and larger and riskier trades until they give it all back and more. There are countless stories of people who had early success then lost it all. If your goal is a daily amount, a weekly amount, a yearly amount, be happy when you achieve it. You may be able to increase it as you become more successful with any of the previous strategies, but at some point, even the biggest companies in the world or the richest people in the world cannot continue their same trajectory. Maybe investing $1,000, $10,000, or $100,000 works for you, but when you go to that next level, you pay higher prices because the liquidity isn't there, or the market makers move against you, or your emotions get the better of you with more on the line, and you make poor decisions. Whatever it is, recognize when you are pushing yourself too far, and instead of being discouraged, be happy with what you are doing successfully and keep doing it. Hopefully this did help some of you, and if you liked it, please share. Also, feel free to contact me through any of my social media accounts or website if you would like to talk or learn more. Thank you.